From Kansas State University, this is Agriculture Today. Eric Atkinson here. Here's what's ahead. On the grain markets, K-State's Dan O'Brien back with us. He'll talk about the current corn to wheat price ratio at Western Kansas elevators and how the market is encouraging wheat feeding to cattle. And he'll look at how speculative traders are viewing the current grain price trends. Then K-State's Sarah Sexton-Bowser and Tim Dalton will look with us at a K-State international project which has developed genetic answers to a pressing insect problem in grain sorghum production here in Kansas and elsewhere, the sugarcane aphid. Sarah and Tim will fill us in. And further ahead on Kansas agricultural weather, K-State's Mary Knapp joins us. All this and more next on Agriculture Today.
While many people know hunger is an issue in developing countries, it is also a problem in our own backyards. In 2010, 1 in 7 Kansans struggled to put adequate food on the table. 2 K-State research and extension programs are tackling this problem. The Family Nutrition Program and Expanded Food and Nutrition Education Program reach thousands of Kansans in more than 70 counties. They learn how to eat healthy with a low budget. For more information about these programs, visit ksre.ksu.edu.
You're tuned in to Agriculture Today. Glad to have you aboard once more. On the grain markets now, we have in studio this time around K-State Research and Extension grain market economist Dan O'Brien to impart his latest thoughts on what's happening with these trades. And it's all largely, at least, favorable news, Dan. Let's start on the corn side. That market's still rolling. Moreover, there's this interesting wheat to corn price comparison going on. Talk about all that.
When you look at where prices closed yesterday for March at $5.50 and compare that to where we were last Friday, basically, we're up about 2 or 3 cents. So you've got March at $5.50 on its close for Thursday, February the 4th. The Dees almost 98 cents lower. Dees 2021 corn closing at $4.51 3/4. So still a thought in the market that we'll see probably some increase in corn acres. Of course, we're also expecting to see an increase in soybean acres. We'll see how that battles itself out. But an increase in corn acres, a normal crop year coming in, and again, about $1 lower prices in the fall. That's what the market's thinking right now. But in the meantime, we're looking at users in Kansas, parts of Kansas and around the country, trying to cover costs at high-priced corn and grain sorghum. So we hear quite a bit of discussion of wheat being fed, especially in Kansas. I think you can run wheat through ethanol plants also, but I just haven't heard a lot of discussion of that, but have heard quite a bit of talk about wheat. And when you look at the cash prices out in that western third of the state, we try to watch the Colby and Garden City markets pretty closely. And here you have the cash price in Colby on, again, February the 4th at $5.58. That'd be for corn. For wheat, $5.84. So that's a ratio of 1.05 or 105%. And that's right on what we, in other years when we're not paying as close attention to it, what we think is about the break-even situation. So, again, encouraging wheat feeding. Garden City, you've got $5.84 corn and $5.96 wheat. And again, that wheat price at all these Kansas locations we're watching down about 20 cents from last week, 19-20 cents. So corn up 2 or 3 cents, wheat down 20, and
simple math, isn't it?
It makes the ability to feed wheat as you push the pencil or pluck the calculator more really accessible. And even in other parts of the state where a week or so ago we were seeing cash corn prices about 120%. Well, now we're down to 110% for a number of areas. So here we have a supply-demand report coming in Tuesday the 9th. At least for wheat, I think we're probably going to see an increase in wheat feeding. At least that would stand to reason given what we have in the country. Now, there's always a question of do we see it now or do we see it at the end of the marketing year out there in March. The USDA may wait until they get verification on that on March 31st in the March 1st grain stocks report. But if they come in and try to anticipate that, then you'd see that coming in. And, of course, we watch the wheat export numbers. Mm-hmm. They're doing okay, doing decently, but running at a pace that if you just arrowed out where we're at right now, we may have trouble getting to the 985 million bushels projected for the U.S. for wheat. So you have this horse race between the increase in wheat feeding and the moderation, or at least the okay pace in wheat exports. So I would not be surprised that we end up, by the time all that works itself out, we have pretty strong wheat feeding, and we end up and take the USDA's projection for ending stocks from 836 million bushels down, is it 50 million? Is it 100 million? Just depends how strong the wheat feeding is. Mm-hmm. So that's something to watch. We still have international news coming out about Russia talking about a formula for rationing exports, and other places around the world being concerned about having their wheat supplies pulled in too strongly. A lot of that stems from China going to these countries trying to grab everything it can. So that's, you have underlying support in the wheat markets, and of course you see that in the closing prices. March 2021, $6.18, and that's down about 20 cents from last few days. So over $6 futures and cash wheat prices, strong basis levels for wheat now too. So a lot of demand pull going on, affecting the cash markets in Kansas, and that follows from pretty strong wheat futures markets too. It's impressive what happens when once overly abundant wheat supplies go the other direction, and we're witnessing that right now. Worry and fear in the market makes a big difference. We have an urgency to secure supplies right now in these grains, and in a typical year when we have abundant supplies, if you don't buy wheat out of this pile now, well, it'll probably still be there next week. But if you don't buy it in a situation like this, if you don't secure what's out there, then it may not be there. So that's a big difference in psychology and urgency in the market. On the soybean front, Dan, the South American soybean production situation is starting to clear up some, it would seem, and the market is taking stock in that. We hear reports from their trade groups saying that they're looking for pretty strong production. Now, we've been looking at their weather maps, and they don't look too good in a number of those areas, but still, one issue is supporting our soybean market and our strong exports has been the delays that occurred because of weather there in South America that's pushed out farther the availability of those South American soybean supplies. And here we are the first week in February, and I guess my question is, where will we be in the first week in March by the time those supplies start to come in? So you just reveal some of my bias. I think there's kind of cross-market support here that happens when soybeans do well, particularly new crop contracts. Then corn, because it's worried about acreage in the coming year, it can't lag far behind. But how does that affect the upfront, the lead contracts? I think that there's, given the consistency of the ratios between these two over time, and again, we've seen the current lead futures number be about 2.5 for several weeks in a row. 2.5 ratio between the lead soybean contract price and lead corn contract price. So if they were dissociated, you'd see a whole lot more variability and volatility than I see there. It's pretty consistent. So if we start to see exports being pulled out of South America and there's some weakening in export demand, and it wouldn't have to be really even weakening, just a moderation, then something to watch. I try to follow in times when we're struggling to figure out price direction to look over at technical trends, and not even the most wild-eyed technical trends, just some of the most basic ones, like moving averages and some of these Bollinger Bands. And when you look at what's happened in the soybean market and the wheat market of late, yes, they certainly had a major rally, but the last week or so, they've been more sideways. Mm-hmm. So it's something to be watchful for, as opposed to corn, which is, after its time of weakening about a week or so ago, it's got right back on track and it's moving back up strong again. So of these three in the most recent weeks, and if people are trying to look for some guide as to what to do with their cash marketing for old crop and even maybe new crop, it does seem that the corn market right now is holding up a little bit stronger in its trend than what we've seen in soybeans and in wheat. You have some thoughts in your notes this week, by the way, on how speculators are reading all of this. Are there any indicators of value to producers in those charts? Well, two things stand out: the position of commercial traders and also the position of the commercial speculative traders, or just the spec traders. The formal term that the CFTC uses is the, quote, managed money people. Right. Sometimes if you're really a spec, how well managed is it? But still, it's managed. But for the hedgers, those that are hedging price risk, large positions, probably as large as we've seen. You see that for corn, for wheat, nearing as strong a position as you've seen for a good long time. For soybeans, by far the strongest position. So there's a lot of users that have really hedged themselves on this thing. So bless their hearts. They're managing risk, and that'd be elevators, any processors, et cetera. And farmers would be in that because we're dealing with a cash commodity. But when you see the positions of the managed money people for corn, for soybeans, and for hard red winter wheat, it's an interesting pattern. They seem to have gone up. The amount of long positions revealed in terms of bushels gone up to about the 2012 levels and haven't gone beyond that. And in fact, for some of those, they've declined a little bit from where they were. Wheat, about 2010 was a strong area. So long positions have increased for all of those. So really interesting to see that soybeans have been moving a little bit more sideways, as has wheat, but corn's still going up.
And you note, once again, the USDA, due to crank out another World Agricultural Supply and Demand Estimates report this coming Tuesday. And Dan, as we go, you've been saying all along that producers need to be standing by for potential signals out of those reports and the possibility of them triggering volatility in the markets.
Yeah, I know as a university extension economist, hand-wringing is what we do. But I would say that in the corn market, there's a lot of sentiment in the market that supplies are just awfully tight, and there would be no surprise if ending stocks on this old crop marketing year ending August 31st end up closer to somewhere between 1.25 billion and the 1.55 that they have now. So there's kind of a sentiment that things are as tight or maybe even tighter than the USDA is representing here. As you look at soybeans, there's some concern that we have such strong exports that we may crowd crush. If we see that in the February 9th report, that's kind of a sea change, really. If our exports are so strong that we have to ratchet back crush, then we're in a tight squeeze on supplies, and you've got the two main uses battling it out.
Well, we will have those latest USDA grain supply and demand numbers in hand when we visit once more next week, Dan. Thanks, as always.
Thanks, Eric. Take care.
That's K-State Research and Extension grain market economist Dan O'Brien. And you're listening to Agriculture Today. Legal and financial concerns surround the day-to-day management of the agricultural industry. Producers, ag creditors, and USDA agencies rely on Kansas Agricultural Mediation Services. If you've received an adverse decision from the USDA or have an ag credit concern, call today 800-321-3276 or visit us online. Kansas Agricultural Mediation Services, exploring options, generating solutions. Welcome back. You're listening to Agriculture Today. And on this segment, we will tell you about a definite success story in the battle against a prominent insect threat to grain sorghum production, as we've found in recent years here in Kansas. That would be the sugarcane aphid. From the Center for Sorghum Improvement here at K-State, its Managing Director, Sarah Sexton-Bowser, also the Director of the Feed the Future Innovation Lab for Collaborative Research on Sorghum and Millet here at K-State, Tim Dalton. And Sarah, the importance of this project we'll speak of to the grain sorghum industry. It's high on the ladder, isn't it?
Eric, if you've spoken to a farmer who has had a sugarcane aphid infestation in their field, they would tell you it's very high on the ladder. And it is such in that farmers who have experienced threats by this pest suddenly deal with cumbersome challenges through that harvest experience, may have loss of potential yield, and certainly just have a lot of sticky headache. The industry started facing this pest in the mid-2010s. And since then, we've reacted fast in the industry. We first reacted by identifying where the bug was moving across the sorghum belt. We identified chemistries and management approaches, and then also went quick to work on the genetics. And just as we were finding those solutions and stitching them together for the growers domestically, we certainly started recognizing that this was an international challenge facing. And so that's what we're here to talk with you today, some solutions that came together to mirror our opportunities to manage this on an agronomic side, but also with tools and those genetic backgrounds of the sorghums that we raise.
Sugarcane aphid is not a new pest, Tim. It actually presented itself, so to speak, on the international front back in the 1980s, at least that far back.
That's exactly right, Eric. And the history is quite long, and it is really a testament to long-term commitment to a problem that was foreign to us, but it arrived. And so from what I understand, the sugarcane aphid has its home originally in Asia. And in the early 1980s, the sugarcane aphid showed up in southern Africa. So the predecessor to my program, the International Sorghum and Millet Collaborative Research Support Program, it was run out of Nebraska-Lincoln at that time, had a call from collaborators in southern Africa because there was this new pest that was attacking sorghum there. And so it was a collaborative work between entomologists and breeders at Texas A&M University with a breeder in southern Africa. And this started in the early 1980s. By the mid to probably 86, 87, they had identified, of course, the pest quite early on. And through collaborative work with partners in Ethiopia, screened a broad range of varieties, finding that there were a certain number of them which demonstrated tolerance to the sugarcane aphid. So at that point in time, the breeder finished up his degree, went back home, and he started to breed in some of this tolerance for his local varieties. And it took off and provided some durable tolerance or resistance to it. Now, you think forward into the 90s, into the 2000s, we consistently worked with our international collaborators as that pest was moving. And over time, it did. Just like anything internationally, diseases, insects, we know they're going to move. And the insect came up to West Africa. And then in the early 2000s, it came across on the Harmattan winds that blow off of Senegal, across the Atlantic, and was deposited in the Caribbean. And it's just been a devastating pest in Haiti. And then a little bit later, in the early 2000s and 10s, it hopscotched up into Florida, around the Panhandle, and made its way to the sorghum belt. But the exciting thing about it is when we did identify that pest, as Sarah mentioned, we started looking at the materials that had proved resistant quite a bit earlier. And so that pipeline of materials was continued to be evaluated and screened for a pest that wasn't here, so we were ahead of the curve. And that made the response so much more quick, and it gave us our first line of defense in addition to all the chemistry. What was really exciting was in the current phase of the Sorghum and Millet Innovation Lab, one of our collaborating country is currently Haiti. Mm-hmm. And just recently, we've uncovered the genetic locus of sugarcane aphid tolerance, and we're working to move that forward.
That discovery has been made here through efforts at Kansas State University. Sarah, you might expand on that a bit as to what's been achieved here. It gets back to genetic markers being identified. Explain, if you would.
Tim is right. There was a rich community of resources in that we had the genetics available in the backgrounds already. So within the genetics of U.S. sorghum breeding companies, we had tolerance, but it became a matter of selecting for that tolerance. And you can imagine a pest like sugarcane aphid, it's challenging to select for. So you make combinations with a parent that has background that's known to be tolerant, but then you either have to use greenhouse screenings, which may or may not be relevant, or you have to plant a portion of your sorghum nursery and pray that you get a sugarcane aphid infestation, which is counterintuitive on what to hope for lots of reasons. Nonetheless, it's challenging to develop and advance the genetics that have the right tolerances in those backgrounds. That's where a collaboration with the genetic program at K-State came into play with the breeding program in Haiti. And as you can imagine, the intensity of the stress and the pressure, the infestation in the Haitian breeding program quickly did selection for anything that had tolerance lived, but everything else didn't live. The pictures are black and white and what has tolerance and what doesn't have tolerance. And so that population was a ready-made population of sorghums where we could go in and do some genetic analysis to see what are the commonalities of imparting tolerance to those sorghums that allows for them to express tolerance even under those intense periods of time of infestation. And then is where markers came in. Markers allow us to take a snippet of a sorghum plant, a little leaf tissue, and run it for a minimal cost, run it through a lab and say, hey, did the gene that imparts tolerance end up in this plant? Yes or no? And that allows a breeder to say, okay, I don't want those plants because they don't have that tolerance to go ahead and move forward. And I'm going to make sure and allocate my R&D space to resources, to genetics that do have an ability to move forward and to provide that tolerance that farmers are looking for in the seed bag. When we realized that there was an opportunity to take the work that had been done through the Sorghum Millet Innovation Program and explore the question of, does this have relevance? Do these markers work in domestic sorghum breeding programs? We went to work quickly calling seed companies and saying, hey, we have markers that we know to have a high efficacy, a high ability to reliably predict tolerance in your sorghum backgrounds. Can we design a plate to test if this works in your materials? So Terry Felderhoff, he's a molecular sorghum breeder at K-State. He quickly got to work designing experiments for seed companies to say, yes, this works in my material, or no, it doesn't. We've done this with over 7 seed companies at this point. Seed companies are really excited to do this and look at this, and it's an opportunity for us to both work with seed companies that have a lot of R&D infrastructure internally but maybe hadn't allocated the resources to develop markers for this trait, all the way to seed companies that have never used a genetic marker before. So it's really translational in how it allows us to impact the entire seed industry and make sure that we are providing enabling tools to hasten the quality of genetics that are winding up in the seed bag.
That is the success story in that those companies are able to utilize those markers in a fashion that can lead us to sugarcane aphid resistance at a high level. But it's not done yet, this work. Is that right, Tim? There's a next phase to the project?
Well, actually, we're really excited about a new project that is going to continue this work. We call it Sugarcane Aphid 2.0, which is going to refine those markers. So right now it's a broad marker that is kind of like a sledgehammer. It's a pretty effective, but we expect, just like we're seeing mutations in the COVID era, we're seeing mutations in the biotypes of the sugarcane aphids. So we've invested more to go deeper and look at more specific markers, which would give us a better handle as the pest evolves into the future. And so that's what we're investing in for another 2-year project with Haiti in collaboration with the Sorghum and Millet Innovation Lab. And it's really exciting because industry is very excited about this as well.
Tim is right. Needing to diversify the types of tolerance that we have in the background is really essential. And so as Tim's program moves forward and makes a substantive investment in next generation SCA 2.0, there's also U.S. private industry that's making commitment as well. And so that's through the farmer program of the Collaborative Sorghum Investment Program. The seed company and Innovative Seed Solutions is making an investment to be complementary. And that way we can accelerate this effort and make sure that there's available genetics that helps the globe in responding to the threat of this pest.
Well, it's a great and ongoing achievement. Congratulations to the two of you for your respective roles in making this happen. Thanks, Tim, Sarah, for being along with us today.
Thank you.
From the Center for Sorghum Improvement here at Kansas State University, its Managing Director, Sarah Sexton-Bowser, along with the Director of the Feed the Future Innovation Laboratory for Collaborative Research on Sorghum and Millet out of K-State, Tim Dalton. We'll be back with more. You're listening to Agriculture Today.
Agriculture and food systems are the main drivers of the Kansas economy, but must be improved in order to feed the world's growing population. How are we going to do so? Reduce food loss, find ways to preserve grasslands, and help families stretch their dollars. Global food systems is one of the 5 grand challenges K-State Research and Extension is addressing. To learn more, visit www.ksre.ksu.edu.
You're tuned in to Agriculture Today over the K-State Radio Network, again, now in its 97th year of broadcast service to agriculture in Kansas and the Central Plains. Eric Atkinson here. Today's agricultural news headlines for you now, courtesy in part of DTN. Bayer has agreed to pay $2 billion to resolve future glyphosate cancer class action lawsuits. This in a settlement filed in federal court on Wednesday. In June of last year, Bayer reached a settlement of between $8.8 billion and $9.6 billion to resolve current and future litigation on glyphosate and dicamba, but that agreement ran into legal troubles and has not been fully finalized. Now, Bayer is trying again, this time focusing on a settlement just for future claims of injury from glyphosate or Roundup. According to a Bayer News release, the settlement would establish a fund to pay between $5,000 to $200,000 to future plaintiffs who allege that they developed cancer from glyphosate use. The settlement would make a total of $2 billion available and would last for 4 years. The company also said it would create an advisory science panel whose findings would not be preclusive but could be used as evidence in potential future litigation involving class members. Bayer, as you recall, acquired Roundup brands as part of its $63 billion purchase of Monsanto. Bayer continues to maintain that glyphosate is safe, regularly pointing out that the EPA and many other countries' regulatory agencies support glyphosate's continued use. However, during the past few years, Bayer has lost a number of lawsuits from plaintiffs who allege that their use and exposure of Roundup caused non-Hodgkin's lymphoma and other cancers. Tyson Foods withheld from investors information about how its plants were handling COVID outbreaks. That's the claim of a new class action lawsuit filed this week in a federal court in New York. It's seeking damages for investors who bought Tyson securities from March 13th to December 15th of last year. The lawsuit alleges Tyson's public statements to the U.S. Securities Exchange Commission did not match reality for workers in the company's plants. Tyson did not respond to DTN's request for comment on this. This lawsuit alleges Tyson didn't take the proper steps to protect its workforce, despite its statements made to the SEC. Shareholders sustained losses when the company's stock value fell. Specifically, the lawsuit alleges that Tyson knew or should have known that the highly contagious coronavirus was spreading throughout the globe, in the words of the suit, yet did not in fact have sufficient safety protocols to protect employees at its plants. The plaintiffs allege because Tyson did not protect its employees, it did not disclose to the SEC that it would suffer financial harm related to its lowered production. Now, Tyson has 140 food processing facilities in the U.S. Some are still operating below capacity. The Food and Environment Reporting Network database of food processing infections shows that Tyson has had more than 10,000 workers infected by the virus. On Tuesday, Tyson announced a new pilot program to assess and monitor the effectiveness of the company's efforts to protect workers from COVID. That program will include on-site assessments based on the latest guidelines from the federal government as well as state regulations. Well, from an entry-level position with the Kansas Wheat Commission staff to a leader in international food relief programs, David Fry has logged over 40 years of diverse service to the Kansas wheat industry. His contributions are chronicled by Marcia Boswell on this week's Kansas Wheat Scoop. Marcia?
A chance conversation would lead David Fry, a young broadcaster, to a career representing Kansas wheat farmers for more than 40 years. In 1978, Fry was working as a newsman for a radio station in Hutchinson. His mother had an interesting conversation at her hairdresser's with Anna Jane Baird, then home economist with the Kansas Wheat Commission. The organization had a new communications position open, and it sounded right up Fry's alley. He interviewed in Topeka and was named the Director of Public Affairs. Rich Hawkins, a broadcaster with KXXX in Colby, challenged Fry to start a weekly radio program, creating the precursor to the Kansas Wheat Scoop in his very first week of work. Fry said, "One thing I felt I could bring to this wheat farmer state agency was to get wheat issues in the media." Fry continued to grow professionally with the Kansas Wheat Commission, eventually becoming the organization's administrator from 1996 to 2005. During that time, Kansas hard red winter wheat became part of the international spotlight on wheat, with government and cabinet-level officials from other nations traveling to Kansas to meet with farmers and learn more about the crop and U.S. wheat purchase and delivery systems. In addition to market development, Kansas farmers have long supported PL 480 food assistance programs, better known as Food for Peace. Fry recalled when the Minister of Food visited Kansas from Bangladesh and told him that the program, which provided wheat and flour, was truly food for peace in his country. Fry said his comments are something that stuck with me. I realized how valuable it is that Kansas farmers are producing far more than we can consume, and how critical that is, literally life or death, for many places in the world. From 2005 to 2016, he worked in international development projects in Afghanistan, where he served as the country director for Grain Industry Alliance, subcontracting with USAID and living in Kabul. His work included oversight of grain storage construction, water wells, and training programs. He said working with the agricultural sector in Afghanistan gave him an appreciation for research investments in the Kansas Wheat Innovation Center. He pointed out the unique setup with a building owned by Kansas wheat producers, but a place where commercial, private, and public wheat scientists and breeders can work collectively. Where else do wheat farmers and others feel compelled to invest in wheat seed development and share the knowledge with other public and private scientists to meet the coming future demand for food? I believe in what the Kansas Wheat Innovation Center is doing. It is world-changing powerful and something that needs support, yet returns so much more value than the investments made. For Kansas Wheat, I'm Marcia Boswell.
Thanks, Marcia. One quick calendar item before the break. The 108th Cattlemen's Day at Kansas State University is set up for Friday, March the 5th. It will be an online format. And to participate, you'll go to asi.ksu.edu. On the program, the featured speakers, Jason Lusk, Jason Rumley, and Robert Norris. They'll talk about the pandemic, how it's affected the U.S. beef industry from the producer and processor and beyond. Jason with Purdue University, its head of Department of Agricultural Economics. Rumley and Norris of the Radian Group. Plus much more to the program. Again, learn more about it at asi.ksu.edu. Cattlemen's Day, Friday, March the 5th. You're listening to Agriculture Today. Agricultural producers, landowners, and creditors, you have a partner in your legal and financial needs. Kansas Agricultural Mediation Services offers reliable, trusted information and guidance. Whether you need advice for ag credit concerns or are transitioning your operation to the next owner, Kansas Agricultural Mediation Services can assist you in making sound decisions for your business. To learn more, call 800-321-3276 or visit us online. Topping off this Agriculture Today, it's our weekly visit with Mary Knapp, climatologist, K-State Research and Extension, on Kansas agricultural weather. And Mary, fresh in hand, you've the January summary on our conditions in Kansas. And what's the basic story there?
Well, basically what we had was statewide, it was a very wet month. We had almost 2 times what we would normally expect in January. The unfortunate thing was that, as those in the West can attest, it was very heavily skewed toward the eastern regions of the state. All 3 eastern divisions were more than 1.5 times their normal precipitation for January. Central divisions weren't much further behind. They were all above normal. But you get out into the west, and you're looking at less than 75% of normal for January. The driest was the southwest, and they averaged 0.28 of an inch of precip, which is 62% of normal.
It really rings familiar.
Yeah.
The haves and have-nots, east to west. Temperatures, well, we had our extremes, which is nothing new for Kansas either.
Right. The extremes went from a high of 72 degrees at Montezuma to a low of minus 10 at Tribune. So, again, not unexpected in Kansas. Overall, the month was warmer than normal, not by much, 3.2 degrees, but it ended up being the 25th warmest January of record. Might note that on the precip side, it was the 12th wettest. So wet and warm would basically characterize the month.
Very well. And now we can talk about the latest drought monitor, which is showing improvement, you say.
Right. We did see significant improvement, not surprisingly, in the eastern and central parts of the state. Southeast Kansas is basically drought-free, crept up with just some abnormally dry in east central Kansas, and same in central Kansas. We still have some abnormally dry and moderate drought in the northern parts of the northeast and north central divisions. Not surprisingly, as we move west, we're still entrenched in that extreme, severe, and moderate drought. They just haven't had enough moisture to make much in the way of improvements out there.
And again, at this time of the year, we don't see major swings in that monitor because of our typical patterns, right?
Right. Well, and even when we talk about having double normal, January is not a particularly wet month, especially when you're talking the western divisions. In the east, you don't see quite the fall off of average precipitation in the winter that we do out west. So you have to have a little bit more to keep it up to that normal level.
As for what's ahead and looking to the weekend, the word is that we may see some snowfall return to parts of Kansas. What is the latest there?
The latest is that we do have a chance of precipitation, mostly likely to be in the form of snow. Not very much. We had snow here in Manhattan yesterday, and there was a dusting on the ground, and it was gone by noon, so it wasn't really much to talk about. The moisture equivalent in that was a trace at best. Saturday's storm is very likely to be of that same nature. What is interesting is the possibility of moisture midweek next week, and we're watching that carefully. It's kind of hard to tell yet whether or not that moisture will tap into it. What's going to be more interesting is that we're going to get a very brutal cold snap. The West, as we noted, already has seen sub-zero temperatures. That's not been the case in central and eastern Kansas, but it looks like this next round of cold weather is going to plunge us into the icebox. We're talking highs in the teens, lows in the single digits to maybe some sub-zero readings.
And not for just 2 or 3 days. The duration of that cold snap is what has people a bit on edge.
Right. The duration of that cold snap is likely to be 7, maybe 10 days. So it's going to be a fairly extended cold period, which is why the February outlook favors colder than normal for the month. We're going to be so cold to start out the month that it will be very, very difficult to rebound from that as we wrap up February.
And as you say, they've amended the February outlook to that extent, as well as on the moisture side, you say?
On the moisture side, they did not change much, but it is favoring a slight chance for wetter than normal across everywhere in the state except that southwest corner. And again, much of the state has already had a big jump forward on the precip with the snows that we had to start out the month. So we'll see how that plays out and how much we get out of this weekend storm and the midweek storm next week.
Well, looking even beyond then, what's the latest on La Nina and the chances of it fading?
Well, the La Nina has begun to dissipate a little bit. It's still expected to continue through the rest of our spring. At that time, they have like a 55% chance that it will be neutral. What they're watching is whether or not there's a second dip in those ocean temperatures and we go back to a La Nina for the fall. That pattern of a double dip of La Nina is not uncommon. As we well know, that La Nina, particularly in the fall, has a strong signal for warmer and drier, and we just as soon not have a repeat of that.
Then that previously posted forecast for this coming spring has not changed, it doesn't sound.
Right. The 3-month outlook for February, March, and April still favors warmer and drier than normal conditions for the state. Again, February is not one of our wettest months, so even if we are above normal for February, it won't counterbalance a dry March or a dry April.
Well, bundle up. The next time we talk, we'll be discussing just how cold it got.
Right, and the other problem with the cold that's expected is we are likely to have some fairly strong winds with that, so the wind chill values are going to be brutal. Producers might want to check out our Cattle Comfort Index, and for the people, we do have a wind chill index page so that you can see what the comparable temperatures would be.
Check that out at mesonet.ksu.edu, and we'll talk again next Friday. Mary, thank you.
Thanks, Eric.
Climatologist Mary Knapp, K-State Research and Extension. As always, thanks to you for tuning in. Eric Atkinson bidding you a good weekend for Agriculture Today. This is the K-State Radio Network.